Hi everyone, my name is Lydia, and if you clicked on this video, you are awesome. If you don't already know, I have been in the field of finance for more than 10 years. Let's get started with today's video, which is all about infinite banking. So what is infinite banking? Really, the concept comes from something called Indexed Universal Life Insurance, or IUL. So what is an IUL? Basically, it is a whole life insurance policy where the cash value of the account is tied to an index like the S&P 500 so that it can grow over time. So who needs something like this and why should you buy it? Well, I'll be covering all of that in this video and how you can use your life insurance as a potential vehicle for retirement, starting a business, buying a car, buying a house, and guaranteed to leave a legacy to your children. You know, I'm sharing a lot of this knowledge with people so that you know what's out there to help you on your financial journey, and I have been lucky enough to have passive income. So one, from sales. When I started selling life insurance, I now still receive passive income from the trails on those sales, but also I have had different jobs where I automated my job and then sold the software back to the company, and I saved so much money and invested it that now I have been able to live a relatively relaxed lifestyle. I'm just trying to share on this channel information that's going to help and inspire people to go where they want to go on their financial journey. Who can afford such a thing? You must actually have a steady stream of income. It's typically best for public employees as well as people who have cash that they want to put somewhere and they don't want the government to tax them to death on. I mean, to put it simply, people who have a steady income with a pension plan are ideal because this is a type of policy that you need to pay for your whole life in order for it to actually bear fruits of the benefits that you are seeking. So what do I mean by that? I mean that it's usually a higher premium policy where you can kind of get, if you just want life insurance, you can get a term life or a whole life policy that's relatively cheap, like $30, $40 a month. But when you're talking about an IUL, you could end up paying about $300 a month. If you're 24 years old and you're a public teacher and you put $300 a month into your IUL, you can pretty much retire on that income when you're 60 if you're able to continue making those payments. And it's a pretty sweet deal, but the thing is, a lot of people have a hard time believing it. Like, how is this legal? How can you do it? What life insurance is only supposed to be mine when I die? Well, that's not true, because actually in the law governing life insurance, you as the policy owner own your cash value on the account, which is any money in your premium that is not going directly to the cost of your insurance is still owned by you, and it is invested into an indexed account, so you can actually get some of the benefits of market upside. So that's how it's legal. And why is it awesome? There's actually a couple reasons why this is really awesome, and it's because one, life insurance is not a taxable asset, and two, you can sort of be your own bank. Like, you have to wait a few years before you can access the cash, but after 4 or 5 years you can start using that as a loan. You can take a loan against the cash value of your insurance policy to buy a house or buy a car and then pay back yourself. And the cool thing about this is that when the insurance company marks this up in their books, you're still actually earning interest on the full cash value as if you didn't take the loan. The thing is if you don't pay back this loan, when you die, it is subtracted from your death benefit. But usually the death benefit is quite large, and actually larger than a typical insurance policy. So it's sort of a win-win for everyone involved. The insurance company still made money and they still profited, and also the owner still benefited from having a policy, and usually there's still something left over. The funny thing is, people will often call this like a secret of the rich. Like, a lot of rich people are doing this because they have so much extra cash that they're trying to keep the government from getting their sticky paws all over. At the end of the day, if you're looking to sort of become your own bank, it's worth it. Because when you have the cash value to take out a loan for a down payment on a mortgage, you are essentially not paying the bank interest for that. And when the cash value is sitting there, it's tending to earn more interest than if it was just sitting in your bank account, while you're saving up for that house. So if you do have a 5-year plan, if you are looking 5-10 years into the future, this is something that is extremely beneficial and is often overlooked. And I'm so excited that you've taken the time to watch this video. If you have any questions, please let me know in the comments. I'm happy to answer them. I do read the comments and I am able to respond to most of them because this channel is still small enough. And with that said, if you are interested in learning more about indexed universal life policies, I am no longer selling policies. I'm no longer an insurance agent. And actually, I highly recommend you reaching out to John Becker. And he is based in Colorado, and he is extremely experienced. And I know from working with him for years that he is the best in his field, and he has helped so many people reach their financial goals. I highly recommend that you reach out to him using the contact information here. And with that, I'll see you in the next video. Thank you so much for watching. If you haven't already, give me a thumbs up, hit the subscribe button and the notification bell to stay tuned for weekly updates to optimize your financial portfolio and thrive financially. My name is Lydia, and I'll see you next time. Thanks. Bye.